Did you guys get into this one yesterday? Did y'all get into Build-A-Bear workshops? I know I did. I know I got in. Let me know what else is on your radar today, YouTube. What are we watching today? Can y'all hear the music? Throw 1 in the chat if you can hear the music. All right, I'm getting some 1s. I'm getting some 2s. I'm getting some no music. Justin saying he did, but only a small position. He wish he would have YOLO'd it. You know, Justin, that's when that old saying, high risk, high reward comes in. You know, you don't risk a lot, you don't get rewarded a lot, and vice versa. Beatbox, AB. Nah, fam.
Sorry, I lost track of time, but Neal's not here anyway.
Where's Neal?
How's Trey?
He's good.
Didn't bring with him that big of an audience.
We're live right now, Spence.
Well, that's the truth.
There we go.
Own it. I own it.
Now we got some music going.
I own what I said. I'm scared.
Wait, all right. I'm gonna do this. I'm gonna pull up that the video that I showed you earlier, Spencer. I'm gonna show.
Wait, seriously, where is Neal? We don't know where Neal is?
He's probably. Oh look, I just got on Twitter. Shapiro's calling for impeachment. That's interesting.
Who's Shapiro?
And Shapiro?
Okay, I don't care.
I don't care. I already saw that. All right, guys, I showed Spencer this video earlier. We're going to play it because I find it very hilarious. So some quick context. Mike Shannon has been the radio broadcaster for the Cardinals since 1972. So coming up here on 50 years if he makes it to next year. And yeah, this video is hilarious. So we're just going to have to watch it.
No fundable token, limited to digital item.
So you're talking about NFTs.
That's what you're gonna give me? Huh? That's it, huh? No fungible token. NFE. Oh, here we got a printout now. Let me read that.
We shouldn't laugh at this guy. He's old.
Here's strikeout number 5.
Wait, okay. The pitcher just hit that batter, and he goes, strikeout number 5. All right, continue.
He's just too distracted reading the NFT thing.
NFT stands for non-fungible token. A digital token that's a type of what is that word? Cypro.
Oh no.
Cypro currency. Much like man, they have words in here I've never heard before.
This is a word
and what's this word here? Ethereum.
That's pretty good.
Yeah,
he nailed Ethereum.
But unlike a standard coin in the Bitcoin blockchain, an NFT is a unique and can't be exchanged hence non-fungible. That's what it says here, folks. Fungible.
All right, that's enough making fun of Mike Shannon. Great guy.
Is he normally an announcer?
Yeah, he's been the Cardinals announcer since 1972.
He was born in the 1930s. All right.
Wow.
Cut the guy a break.
Yeah. Yeah. YouTube millennial snickering.
Nah, Ack is asking. No, he's not drunk. He was born in the 30s.
He might be. We don't know.
Give the guy a break.
Yeah,
Jeez,
he's pretty.
Louise.
I think it's one of those things where like no one at the Cardinals wants to like fire him because they're like, yeah, how much longer can he really go anyway? Like,
I hope I am half that coherent at that age and still working. Actually, no, I hope I'm not still working. But that was a funny clip, baby. But
yeah, I want to do like an article on it or something today. I'm trying to think of a funny headline. Like Cardinals announcer tries to figure out what an NFT is. Why? I don't know. We'll figure out a good headline.
All right. Oh, wait. Alex Peters is asking the question because Aaron skipped the first part of that clip where he's reading a promo and then he gets to what NFTs are, but he doesn't know what NFTs are. So the first clip in that thread, AB, if you want to play that, was him. It was like, we're gonna get to the bottom of this. Whatever NFTs are, we're gonna figure this out together. So anyway, all right, Neal is here, which means
no more monkey business. Let's get to what we came here for.
So what is the title of this video right now?
Elliott Wave tutorial. But that's because we have a guest coming on at 1:30 here in about 23 minutes. That is the guy when it comes to Elliott Wave. And if you're like me, I know about as much as Elliott Wave as Mike Shannon does about NFTs.
Who's Elliott?
We're going to find out.
Quentin, I'm not going to teach you about Elliott Waves. But you guys stay tuned. Let me see. All right, guys, what are we looking at today? Today's a funky day. Every single sector is red right now. Every single one. That means stuff's on sale. Spencer, what do you have to say about that?
Not every sector. Not every sector. Real estate.
Yeah, REITs. REITs are why it's up. It's real estate, and then you drill down, and it's REITs.
Well, yeah.
Welcome to the REIT show. Hey, guys, this is Get REIT with Neal Hamilton. Okay. Guys, give us a 1 in chat if you love REITs. If you go nuts for REITs. Give us a 2 if you don't know what a REIT is.
Give us a 3 if you don't even know how to read.
Yeah, 3 if you don't know how to read.
I have a cynical stock pick right now.
A cynical stock pick? Is it SeaWorld?
He's going to say like Lockheed Martin.
That's exactly what I was going to say.
All right, that's enough of those guys. All right, guys. I'm liking Palantir. Y'all know I've been liking Palantir. Yesterday, someone got a little. Okay, we got. Okay, we got some REIT lovers in here. We got some people that don't know how to read. Quentin, REIT hater. Tiny Pie. Oh, Tesla is a REIT. Is it a grift or a REIT? We're going to look at SAVA? Okay, we can look at SAVA. I just want to look at Palantir really quick. What did I say? It was at the point of control, bounced right off that bad lad from where it closed. I shoulda sold some puts. I shoulda. Still feeling good about Palantir. This nice little consolidation. Watching for that breakout. Strong above the point of control there on the volume profile. All right, SAVA, we'll do it. Words is hard, my dudes. Deleting everything off the chart. I've got my young Bollinger Bands because I was looking at the indexes right before we started, the indices, so that I can make the bold claim that everything is red today, except for our real estate. What does REIT stand for? REIT. Real estate investment trust. I did it before you. Get out. So we're looking at SAVA. We're going to go down to the 1 hour. Take a little look at what's going on today. We found what looks like a nice little level. We found a nice little level of support here in SAVA. Here, let me go get the next sound going. Yes. All right. So we're looking at SAVA. Look at this. Quite a gap down, ladies and gentlemen. Are you able to see that? If you're looking at your screens right now, adjust your eyes to this blue circle where we see the gap down on SAVA. My goodness. And we are on the 1 hour. Now let's go ahead and just cut right through the noise and just see this as a support level. That was lost. It was lost here with following or preceding a voracious gap up. My goodness. My goodness, ladies and gentlemen. Have you ever seen anything like that? So we're looking at SAVA on the 1 hour. And now the question is, look, is this oversold son bitch about to pop? This good looking oversold son bitch on the hourly about to pop? So here we go. We look at the RSI. The last time it was this oversold, what the heck happened? What happened, guys? The last time that this thing was as oversold as it is right now. I think it popped. What happened over here? Damn. It kind of popped. Wow. So I'm thinking of SAVA. It's in a good little spot right now. For some extra whoa. Cards are getting away from me. For some extra confidence, of course, you would like to see this candle engulf the other, but the body is doing that right now. The body is doing that. Let's go down to 30-minute. Let's go down to the 10-minute. Not quite the bullish engulfing on the 10-minute, but it is looking like a little bit like a V, like we're getting the first shelf here on the V. So we're going to want to see a break above that, break above 71.48 for an indication that we're going to go higher on this one. Holding that support real nice on that support. So yeah, SAVA. If you're going long SAVA right now, a little bit of a lotto, but history has told you it's in the pop zone. SAVA's in the pop zone. So just look for an indication that it's bouncing and not just going lower. You can see this 10-minute session is starting to fill out and go down a little bit. So we just lost that shelf that I was just talking about. So we might get another bounce here. Might get a double on the 10-minute. Let's look at the 1 hour. Yeah, 1 hour, not too sure about it. We just want to see a breakout above that level, 71.5. But that oversold. When stock's oversold, bargain bin. Get your shopping cart. All right, so that's SAVA. Blah, 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 blah. Should be candlelight and wine music with a whispery voice. Yeah, I agree. Okay, we'll do XR. Someone tweeted XR at me. Shout out to whoever did that if you're watching right now. What is Beyond Air? Whoa. Nice saucer. Nice base. What is Beyond Air? What are they selling? Do you guys know? Oh, yeah, I'll get to GME too. I'll do GME NAD. It's a good name. Some sort of software, clinical stage medical device and biopharmaceutical company engaged in developing a nitric oxide generator. Wow, it's this packaged software, and then they make a nitric oxide generator. Damn, this is that good air. Okay. Okay, so we've got a saucer here, which I can bring up just to keep it in the screen. I'm looking at the 1 day. Look, XAir, lowest point up to the neckline. Damn, that could be a big old move. It's really low price stock, could be really volatile. If you get the solid close above the neckline here at, just call it $11. The solid close, you can go down to a shorter time frame, like your 4 hour, your 1 hour. If you get that solid close above it and you're not super overbought, you can feel pretty damn good about entering here. And of course, your first target's gonna be something like this. Even with that said, though, this is where my neckline should be. So I'm not doing this right, guys. I'm sorry. The neckline should be the previous high. So this is actually more like this for the saucer. And then the price target is different than what I have. The price target is, go to the lowest point, boom, or up like that, it's 20, basically $20 or 20 and a half. I would, with this kind of stuff, I usually sell when it's like just like approaching it. Yeah, that could be big old base going back to March of 2020. This is really good stock. Well, like I don't know shit about the company or anything like that, but go back to the daily chart. This is setting up for a really good potential play, but I think that I'm not confident. I'm not entering this until we get the solid break above this. Now it's $12.50, level 12 and a half. You can definitely play it all different ways. Like if you want to be more aggressive and just notice that, yes, it's an upward trend right now. That's very clear. Boom, boom, upward trend. There you go. You can look at, let's see what the EMA 9 does. Yeah, the 9 EMA is not bad for support for the past 1, 2, 3, 4, 5 day sessions. That's good. And we can pull out our old friend, Mr. Bollinger. Yeah, to me, so this is looking like it might get a bit of a pullback at this level, which shouldn't be a surprise because look at the body here. Yeah, caution zone. That's what we'll call this. We'll just call it the caution zone. Give it the yellow tape. Whoops. But yeah, that's a trend line color. Okay. Caution zone. So I would expect a pullback at that level, especially because it's gotten so far away from this 20-day moving average. It's just overbought right now. All right, that's okay. That's okay, but it's still setting up for something that could be really big. All right, what's up next, guys? Can you look at Visa? I think I pooped on myself. Tape, didn't I just do one for you? Tapes, we'll do Visa, but I'm gonna remember your name now. Visa pooped himself. Can I look at Visa? Yeah. Wait, what? It's just V, yeah. Maybe. Well, it was in an upward trend, then it reversed into a downward trend, and we're currently in a downward trend. Visa is in a downward trend. What is the support level here? Previous resistance from this zone. So I'll draw it. Support zone. Actually, it's previous support here. Previous resistance here, before, like on both sides of this little pivot. Yeah, not something I would be really comfortable just calling a bull flag. Definitely looks like a little short-term downtrend. And you might be looking for just like a classic sign that it's breaking this downtrend, which is very easily done by drawing your lines. Oh, we got the caution line. Let's change the color on that so it's easily seen. Increase the opacity there. Yeah, so you just want to see a break above that. And like this could just be like a funky little, I mean, sheesh, could be a inverse head and shoulders over a really short period of time. Over the 1 hour. Yeah, I have no problem calling it that. But I wouldn't be like really bullish on it for a swing trade until it's clearly breaking out of this trend. So you're going Visa. Now clean yourself up. All right, so GME. I'll hit GME. Grant Mazer. Ooh. So similar but different. We're still in the 1 hour here with GME. Big, strong impulses, corrective phase. This is just a little bull flag. The bull flag, right? And then we broke out. We're still in a breakout, even though we've got a red candle on the hour session that we're looking at right now. This is GME. I've got a lot of stuff here, so I'm going to delete the Fibonacci to clean up the noise. Sorry about that. And then I'm also going to turn off my Bollinger Band. There we go. Let's just look at this very clearly. So with this, man, it's kind of tough. Because these wicks are so wild, it's such a pain in the ass. I tend to just resort to the bodies. If we just use the bodies to look at this structure here, it allows us to be more conservative. Like wicks that are not like wild can be included, but I'm ignoring like the just absolutely like totally like out there wicks. On this one, looking at it on the hourly. And then the breakout happened with this candle, I would say. Like this, it hit the resistance here, but then we confirmed the breakout with the candle at 10:30 today, 10:30 Eastern Detroit time. So now it's like, what is the price target? Well, the price target is probably this line right here, but it's really just the distance between the sloping line of resistance and the sloping line of support. Call that the measured move. You grab that, and you add that to the point of the breakout, which is right about here. So it's quite close to whatever this line is I drew previously. This is probably something in the past that was some sort of line of resistance. And you can see that we approached it and then we backed down from it. We still might work our way up to it and pass it. The aggressive way of looking at this, of course, is if this is a bull flag, it must have a bull pull. So we can go back to this previous corrective phase and go all the way to the base of this candle and then go up to the top of this one, which I'm really hesitant to use that wick. I got to be honest with you guys. So I'm just going to be a little conservative with this one and bring it just up to our sort of line of resistance for the meat of the trading here. I'm going to be a little more conservative with this one. And then I'm going to add that to our apex here. Which is right about, like, if I were to draw a line right through the middle of this, it'd be something like that. Whoops. Something like that, like 240. But I mean, everything right now, I was talking to Brad Weber the other day, or actually last night, very briefly. Shout out Brad Weber. Who has a show on Benzinga, fantastic options trader, specializes just principally in options. In fact, his trading strategy was the one that I was trying to remember yesterday, which I can share with you today, because I forgot the moving averages on it. And he texted me and he said, "What the heck is wrong with you?" He didn't actually say that. He's a very sweet man. Totally lost my train. Oh, Brad Weber commented on, because I was talking about the moving averages, and he said yes, those that really works for me. But he said that finally, lately in the market, he's finding things are responding more just to vertical levels. Just basically, like, you know, when you draw your lines horizontally, are just responding to just levels like that, basic stuff, rather than using moving averages, like signals, like a moving average crossing another one. And that's just how it be. You respond to how the market is behaving. You behave in accordance with the market. But yeah, I mean, this little structure here, we're in a good spot. But here, let's see what we look like on the day. Yeah. We can do the volume thing, but like pretty much right where we've got this zone, we got a little congestion here that might hold us here for a while unless we get another surge in volume. It's a shitty line, but it goes right there, coming from this volume profile here on the right. There you go. You have a great day too, Born to Be Free. Hey, Brad's here. Trading grounds. We were just talking about moving averages versus just levels. Okay, that's GME. We might as well look at AMC just to round it up. Similar but different. We're looking at the daily. Let me delete all my drawings. Accumulation, distribution. This is a nice, oh shit, I always do that. Accumulation, distribution. Accumulation. And what comes after that? Usually, or often, anyways. So looking at AMC, it looks like it went through a little bit of like a really short-term kind of oversold stage. This is a very sensitive RSI. But just looking at the chart, of course, it sold off from these highs. Established this kind of base, tenuous, I think, at best. But we have a clear neckline. We've got support in the past. Is currently support for AMC. And then if we're going to do this thing by the books, we take our funky little arc tool, get that thing out like that. And this is how you take a nice little picture so you can post on your Instagram profile and then sell your course. Go from the bottom up to the neckline. And that gets us to $55. So we're looking for a bounce on this. Want to see confirmation of the bounce. I'm going to switch on to the 4-hour candles on this. Yeah, it still looks the same. I'm going to go down to the 1 hour. Yeah. Really just looks like some distribution here. And then again, like what's happening on the larger time frame happens on the smaller time frame where we have this distribution and then establishing this base, ideally holding this level of support like within, we're using a crayon to draw these lines. We're not using like an architect's like pen or pencil. That's Anne-Marie Band, shout out, who said that. So a little bit loosely speaking here with these levels. It doesn't have to be to the tick, as they say. But looking for the bounce. So you want to see on the 1 hour a very clear engulfing candle or the formation of something that starts to look like a little bowl. And then you can go long on that, targeting the highs here, which is around 48. But then, of course, ultimately, if we get this full resolution of this little accumulation phase, we're getting the markup, which a pullback after breaking through the neckline is very standard for right before entering the markup phase. You're targeting $55, 67, which is pretty consistent with some levels here in the past. So there you go. But of course, like adjust the levels, right? So like if was this AMC? If AMC starts getting to like the top of this wick and starts having like a little funky bar, then we're lowering this line. Like clearly that's the level of resistance, and that's the best thing to go off of. All right, AMC, we hit it. We did GME and AMC.
We also hit the goal for me to come back on the stream. So thank you guys. Shelly, 50 likes. Bring Bree back. I'm here.
I'm so glad. Wearing that shirt.
You know what that means? Green shirt, green portfolio, baby. It's got special powers. I told Luke this earlier. If you need to borrow it, like if your portfolio is struggling for a little bit, you need to borrow the shirt, bring some magic back to the portfolio, just let me know.
Can I borrow it?
Yeah, I'm just worried. Your guns are a little bigger than mine, so you might, stretch it out.
Whoa, therefore bigger than Luke's guns.
Yes.
A little, is that Socratic? If A and B, then C? Logically, I'm more jacked than Luke.
Yeah,
I deduce that.
I hope he's not in the chat right now. Otherwise, I might be getting a stern talking to. Wait, no. Shelly, Neal doesn't hate the shirt. Neal loves the shirt.
I love it. I think it makes you look like the Green Knight.
Yep. I don't know who that is, but
it's a mythical character from Arthurian legend that was recently made the titular character of an A24 film that was like, okay, if you guys saw the Green Knight, give me a 1 in chat if you're at least aware of the Green Knight or saw it. Give me a 2 if you have no idea what we're talking about, and we should.
What's the big movie that A24 made?
They've done a lot of movies that have gotten a lot of critical acclaim. I like them.
I'm gonna try to figure out which one I know though. But yeah, we got a good guest today, Neal. Stavros is gonna talk to us about some Elliott Wave. See what else is on his radar. I'm excited because this is something that I personally want to learn more about.
Same here. 100. So why don't we bring Stavros on right now?
Well, wait, let's wait for the universal signal for he's ready.
Oh, universal. Yeah, there it is. I think that means he's ready. Hey,
Hi
how's it going?
guys. All good. Aaron, you good? Been a
Aaron.
while.
Oh, you guys have history.
Not much.
Okay.
But
Not
we
good.
are gonna write history now.
All right, good stuff, Stavros. So it's very nice to meet you and have you on the show.
You too, Neil.
For folks who are not familiar with you or your trading style, would you mind giving an introduction?
Sure. Yeah. Basically, I live over in Cyprus, and I've been working for years in the forex industry, traditional markets. I'm heading currently the investment research department of a forex broker in Cyprus. I'm a licensed person. I've got my SEC license from the Cypriot authorities here. And obviously, it's understandable that I'm very into Elliott Waves. I've been for years now, to be fair. And with the crypto boom, like maybe like a few months back, actually, I thought it might be a good idea to go ahead and create a channel on YouTube because I saw a lot of Elliott Wave analysts, and I saw the analysis, and it was a bit, like I'm like I need to step in here and show to some people what really is Elliott Wave analysis, because I saw a lot of mistakes, and I think people just were too quick to jump in. And the fact that they are quite complicated, I think, it might be to the advantage of someone who's looking to gain some popularity. Anyway, long story short, my channel organically boomed from I have 5,000 followers or so. Not maybe not by much, but organic growth. I think it's doing well. And it's purely because, I'm really into Elliott Waves, and my analysis has proven to be quite good. I have a good following, some people on Telegram as well. So the idea here today is to do a mini course, let's say, in whatever hour we have, whatever time we have, as much as we can. Try to keep it simple and not too complicated, not get into much details. And then what I would like to do is go live on the charts and show my BTC count, Bitcoin, right? Might be interested to some people currently to see what's going on with it, because everybody's expecting this bull run to continue. But probabilities, from an Elliott Wave perspective, show something different.
Don't spoil it. Don't spoil it.
These probabilities change as we get data on a daily basis, right? So we're just here to analyze, use Elliott Wave as an edge, right? And then make educated decisions pretty much about, whether we want to long or short or whatever. And this is obviously, we're talking about a few months' time from now. We're not talking about the long term. Obviously, the long term is crazy bullish, but we will get there as well at some point. So I think it might be a good idea to share my screen. And might be better. Hold on, because we've got the. I think it might be a better idea to start with the whiteboard, actually, right? So we can just take like 10 minutes to do some basics, so people understand what I'm going to draw later on. So the basic idea of Elliott Wave, so the theory, what it tells us is that markets obviously progress and regress, right? So we see a trend. In order for us to see a continuation, we need to see 5 waves up. So usually when we see 5 waves up, this is the progress with no interaction between these two corrections, which I'm pretty sure everybody understands. Then we are getting a corrective leg to do the regression sort of, stage. And from there, most likely markets then continue with the trend, and we do still get this 3-wave counter trend correction, right? Now, when we are looking at this particular leg to the upside, which is 5 waves, by the way, right? And we're just going to repeat. We are looking at a motive wave, okay? So this part over here is the motive wave. And the parts over here, this is the correction, okay? So it is a corrective leg. Corrections have 3 waves, okay? But there can be also complicated corrections that might have 5 waves, or even if you take the internal structure as well, even more than that. Now, people have heard for sure about a cycle. So they say the Bitcoin cycle, for example, did not finish or whatever. So the cycles, from a Elliott Wave perspective, it's pretty much the basic 8-wave pattern, okay, which is comprised of 5 waves to the direction of the trend and 3 waves counter trend, okay. Now all these move from the bottom, which is, just say 0, and let's pull this one and let's label this as a 2, which is the right way of labeling as well, by the way. This is the basic cycle, okay. Now if we look at the market, if we zoom in on this particular 8-wave pattern, internally we're going to find again 5 waves going to the upside and 3 waves to the downside, and that is pretty much the case here as well on the downside, right? So we have a correction here, and within the correction we still have 5 waves down, 3 waves up, 5 waves down. This is a cycle, and when we look internally, we're going to find 38 waves in this cycle, right? So the 38 waves is the full cycle, and this is usually the end for a particular bull market, let's say, right, or bull run. The high is always the 5th wave, because internally here we have smaller waves, right? Now, the upside, which is the impulse waves or motive waves as they are called, the motive waves are always labeled numerically. So you're going to see 1, 2, 3, 4, 5, okay, and nothing else, because these are the motive waves. There is 3 types of motive waves: impulses, which is what I've drawn here, and impulse does not have an interaction. These 2 corrections do not interact with one another. For example, this one interacts because my first wave, 3rd, 4th, and 5th, because these 2 interact. This is a motive wave, but it's called a diagonal, okay? So there is 2 different types of motive waves: impulses, no interaction, and diagonals, interaction. Diagonals are 2 of those. One is the leading diagonal, which we can only see in waves 1, and over here in the corrective phase, which I didn't mention, but I'm mentioning it now. These are always using the alphanumerical, the corrections use alphanumerical labels. So we've got the first wave here and the second wave here, The first wave always is the leading diagonal, okay? So the leading diagonal of the motive waves, right, only appears in wave 1 and in wave A. Now, the other diagonal, which is the ending diagonal, per its also a label as well, it's only found in waves 5 and in waves C. Now, we also need to mention that the ending diagonal can also appear in flat patterns, which we're going to see next. And the flat pattern is a particular correction, okay? Now, I'm going to clear this quickly. We've got the motive stage, which is the one that progresses out the way. And now I'm going to get a little bit into details about the corrections. Okay, so corrections, as we said, are alphanumeric. So we're going to find different types. One type is the ABC zigzag, okay, and we call it ZZ, it's double Z. So this is virtually the same as 1, 2, 3 without the 4 and the 5. That's why sometimes they're very hard to differentiate between one another. There is also the double zigzag, which is called W, X, and Y, okay, and we can name that as a DZZ. What happens in this case is that we're going to have like 3 waves only, 3 waves and 3 waves. As you can understand, this is more of a sideways market usually when we see corrections, right? By the way, let me put this arrow towards the downside, just so people understand we're talking about the bearish pattern now and not the bullish. So that is going to be, for example, a W, X, and Y, right? And this is our ABC. But let's also say zigzag. Yeah, let's also say that this ABC zigzag is actually literally found in here. Okay, in here we have an ABC. So as you can see, if we connect 2 zigzags together with this leg in the middle, this is exactly what is making the double zigzag. That's why it's two zigzags together. There is also a different correction that is called a double three, which is very close to WX and Y. Again, it's labeled as WX and Y. In this particular case, the corrections, they are not, the W and the Y, they are not zigzags, okay? One of the two can be any other corrective pattern. Not, let me correct this, not any, but most of, because as I said, we have other corrective patterns. So off to the other corrective patterns, we do have the flats, okay? A flat pattern is separated into the regular one, okay? I hope my letters are easy to understand, and also the irregular one. Okay, I'm not sure how many have heard this term before. So the regular one, the flat pattern, by the way, it's a pattern that is 3-3-5 pattern, right? When we say three, we mean three waves. So if it's 3-3-5, it means that on the downside we see 3, 3, and 5. Okay, so that's my first three, second, and third. It's also, because it's a correction, labeled as an ABC. Okay, now this is the regular type, because in the correction, in the flat correction, we are expecting actually the move to the downside to be fully retraced by wave B, up to 105% of the first wave, and then we accept wave C to end around the beginning of wave A. Okay, so the regular, the irregular one, which we're talking about here, there's two different types. One is the running flat, okay, and the other one is the expanding flat. Now, don't forget that all these patterns are very important, because the moment you identify those, you know what you can expect. I mean, in the future, you can predict the future with high probability, pretty much, okay? Because these patterns don't come in any order that we like; they come in combinations. So, running flat is when the third leg, it doesn't really retrace fully all the way down here, and the expanding flat is when we are going beyond this previous wave. Okay. The other correction type is, of course, as everybody knows, the triangles. Okay, and triangles can be ascending, descending, can be open, can be contracting, expanding, and other rules and guidelines also, of course, exist over here, which I think if we're gonna really go into the rules and guidelines as well, I think we're gonna have to spend another hour. So I'm gonna keep it there for this small introduction, okay? Just the motive waves, the corrective waves, okay? 5 waves we need to identify to the upside to identify where the trend is heading, and 3 waves to identify where the correction is, okay? And from here, I'm gonna jump to the BTC charts, okay? So obviously some data are missing, the truth is, but we don't mind because we know what the count is, okay? So I'm not going to go into labeling, but this is simply labeling the cycles, because it's different degrees. So if we're looking, for example, at the like 10 years or 1 month, these are labeled differently. For now, I'm just going to use this over here, and we're gonna hold on. We're going to call this a primary, because it's actually the primary degree, right? For more information on this, anyone can obviously, go online and find out how the degrees are labeled. So what we usually do in Elliott waves, we are to identify when the trend has pretty much is under risk of ending. We use a channel, okay? Everybody knows the channel. And what we usually do is go and connect our wave 2 and our wave 4, yes, and then connect our wave 3. This would be, for example, for the acceleration channel. There is also a different channel where we connect waves 1 and 3, for example, yeah, and we'll go all the way down and connect our wave 2. As you can understand now, that flipped a bit weirdly is because I'm using the logarithmic charts, which is always recommended when we're looking at exponential moves, as of course we know with all cryptos is a bit of a situation. So this is our channel. Okay, this is the acceleration channel. You can see that acceleration wise, we've had a correction down here, which means now there is risk of getting another correction outside this. What I will do, I will just try to draw another channel here. So we'll connect the 1 and the 3, because that is going to be our base channel. Okay. And maybe I've got it right here. Let's see. Perhaps not that good, but roughly. It's a bit hard to do it with logarithmic. But anyway, the main point is this, okay, that we have done the first, the second, the third, and the fourth wave. And as we said before in the theory, the main principle is that, we're going to receive the fifth wave, right? And from there, we're going to see a corrective leg, ABC, W, X, and Y, or anything else, once we do a new high, right? The question is, what's going on internally over here, right? And many people think that we finished down here and we're going to move higher now. But there is two thoughts over here, right? Probability-wise as well. One is that this is indeed the case. The other one is that we're going to get another leg down, and I will explain why. First of all, the bull run is not over, okay? Why? Because internally, we have 1, 2, 3, and 4 waves so far. So we need to get the fifth wave in order to consider this bull run finished. The fifth wave can go anywhere above the previous high, but it can also extend massively. Usually it's wave 3 that extends in the traditional markets, but in cryptocurrencies, wave 5 extends due to thin liquidity. Okay, so what this means in a few simple words is that the whales will push the market as high as they can in order to be able to pocket as much as they can. This is the thought behind it, because they can push the market quite easily being whales, right? So if someone holds like 10,000 Bitcoins or the dollar value of it, the tether value, it's very easy for them to push the markets up or down. And the market is very manipulated. Now, I'm going to go back to here, right? Internally, we've got 1, 2, 3, and 4. Many think 4 finished, others think 4 is not finished. I'm going to use the same method, and I'm going to take my wave 1 and wave 3 here, and I'm going to pull the channel over here. I cannot take it much lower down because we're looking at the logarithmic charts, but you'll be able to see that there is a lot of room to move lower down. Okay, there is a lot of room. Now let me delete this, and I'm going to go a little bit closer. Maybe we switch down to the 4 hours, and I'm going to explain why I expect another leg down. Okay. As we said before, markets move in 5, 3, 5 moves, right? So whether we are in a bigger trend moving up or down, internally over here, this corrective leg, because it is corrective, has 5 waves. 1, 2, 3, 4, 5. And these waves are clear 5 waves, okay? The two corrections also match with one another in terms of size and duration, which is something that we need to look at when we look at Elliott waves. With 5 waves being done, this can only be a wave 1 or a wave A. Okay, so 1 means we're going to get 2, 3, 4, and 5, or we're going to get A, B, C. The question is not that. The question is, are we here on a B? Because it's probably going to be an ABC rather than 1, 2, 3, 4, 5. It's 1, 2, 3, 4, 5. We're looking at going back to levels that nobody wants to see. And I'm not saying this is the case. What I'm saying is that most likely this is an A, and this is a B, and we're going to get a C. Okay. The other school of thought, let's say, is that we finished down here. That was the wave A with a truncated 5, which I don't see the reason why you call this a truncation since you have a fresh low. They call this the end of a B and a C, which is in my eyes and with my years of experience, I see this as the wrong way to have a structure that looks orthodox. It doesn't look like a good structure. That's why it doesn't have as high probabilities as the one that I am referring to. But these chances might change. Okay, so we have to, as I said, we have to receive the new data and see how markets are reacting. Now, I am of the W here, and X and Y a school of thought. Why? Because I'm looking at a expanded flat. If you remember, expanded flat is a pattern that has 3, 3, and 5 waves, right? And the wave C is expanded, which is 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5. Many analysts would see this as an ended diagonal. I don't, because I don't like how diagonal it's looking, because it doesn't look much diagonal, and the wave 1 is very extended. It can be extended, but it's very extended in this case. So I'm the W, X, and Y school of thought. And purely, if we just pull our Fibonacci down here as well, guys, you will see that we just barely actually touched our Fibonacci over here. You can use the Fib levels on log or not. So if we use it, the normal ones, we see that 51.348, that's a level for the 61.8. I'm pretty sure a lot of people watching here are familiar with the 61.8 Fibonacci retracement. So the question I have to most analysts is, how can you call something bullish if in the longer term we haven't even broken above the 61.8, which is a very critical level? If we continue higher, obviously probabilities are going to change, but for the time being, this is very important. Now, what else we see? Yeah, and 2 more minutes, and I'll be done. What else we can see is that we've broken outside this channel. Currently, it might just be considered as a false break, but for the moment, we'll consider this as a bearish signal. Now, a lot of people, a lot of analysts are going to assume this is an ABC correction, okay, which is a flat, again, with an extended wave C. I don't see it like this. I see it as W, X, and Y, which is a double correction, a double zigzag. Why? I will explain, because I have never seen, and know that there is an extended wave C on a regular flat that extends 261.8 of the Fibonacci extension of the W and the X. Pretty much that's what I mean. Okay, we are nearly looking at the 238 or so. I've never seen, and if anyone has, I would like to know, because that way I can change my count. But if there is no history to back it up, I'm more of the W, X, and Y school here. Now, what I'll be paying attention, because over here, to me, this is an A, B, and a C, okay? And that looks like an ending diagonal to me. I'll be paying very close attention to this low over here, the 44K. If we break that level, there is very good chances that we're going to continue lower. And the next level to look, obviously, will be the swing low at 37.5, sorry. Now, the one scenario is this. The other is that we still have one leg up to complete the diagonal, because if we look at the diagonal here and the interaction between waves 1 and 4, it's not really what we would expect, because wave 4 has to be a bit deeper. Okay, so these are the two scenarios over here. But as I said before, there is also the alternative that we ended down here, and it is possible, but not as quiet. If that's the case, okay, then this is a wave 1 and this is a wave 2, and this is our wave 3. So we've got 1, 2 in here, yeah, and probably we've got another 1 and 2 over here for a flat pattern, and then we'll continue 3, 4, and 5, 4, 3, then 4 and 5. So we're looking at the multi-structural move to the upside that currently is in a corrective mode, okay, and once the correction finishes, is going to resume to the upside. But as I said, for now, at least, this is the one that I have on the backlog rather than at the front log, if this is something you can say. So yeah, I hope that people have a different perspective now, because we're looking at the market using Elliott waves. It's a theory which I use in practice, of course, that is more than 80 years old now. And you know, it's amazing to see, and you'll be surprised if you learn Elliott waves, how you can create an edge when you trade. And because you either, you know, have a scenario that is likely to be coming in, right, that you trade, or if you get your invalidation, which is, for example, the levels we talked about, you know, to the upside, you get your invalidation, you know, there is the second scenario that you were thinking as an alternative is most likely going to happen. So either way, you can use this subjectivity, as many people call on Elliott waves. You can use it to your advantage as long as you know how to count properly.
Wow. So there you go. A very, very large amount of information condensed into a very short period of time. So you mentioned you have a YouTube channel. I imagine that you have more education on that channel, right?
I would say that most of the videos I do, I don't just go out and just post my account. I actually do live analysis. So the education, the context is a bit educational, if that makes sense.
Yeah.
So yeah, I do weekly video now, to be honest, because of other engagements I have. But there is a lot of, I mean, if you go and watch all the videos I've done since February, there is definitely a good amount of information you can get, even learn about Elliott waves. It's not something that is structured. I do classes and stuff, but this is something different. It's on a private sort of route.
Okay. Well, we've got a bunch of students of Elliott wave theory here in chat, so I think folks really enjoyed that. Are there any final thoughts before we get going that you would like to share with folks about Bitcoin or about Elliott wave theory in general?
Well, the truth is that Elliott waves in general has been in quite a demand over the past few years, but now with the cryptocurrency boom, because Elliott waves, the theory was written based of mass psychology, right? So it was written on market that it was very similar to the one we have now in cryptos because of the thin liquidity. Obviously, we didn't have that amount of money back then, but still thin liquidity and how markets move. You also got to consider the algos as well, and stop handing as well. It's a lot of things to consider, but the truth is that they are on high demand right now. And I would recommend to everyone just at least to know the basics, because if you are only able to identify the 5s and the 3s, you're going to save yourself a lot of time and probably a lot of money as well. Because, crashes that happen in cryptocurrency markets, 70, 80%, 90%, they are sweeping out accounts in a minute, especially now with margin being, 20x and 100x. I mean, 100 now, it's not anymore, but, I would recommend everybody to definitely have a look at it, have a look into it, spend a few hours, and they will be able to see the benefit themselves. Now, when we look at BTC, I would just say that wait for a few more days. End of August is coming in. We are very near to end the month. We have option expirations. We have expirations of other derivative contracts as well. The gap from the CME that we've had at 49K has been closed. So I would want to tell everyone to just be a bit cautious over the next few days, because this is your money, guys. So treat it carefully.
Good stuff. Stavros, thank you so much for joining us today. We hope to have you again soon.
I'm more than happy to jump again. Thanks, Aaron.
No problem.
Yeah.
Thank you, Stavros.
Take care, guys. Bye.
Bye now.
All right, guys, check out Stavros's YouTube channel for more of that Elliott wave goodness. Producer AB, if you wouldn't mind dropping that airdrop that right in the chat once again, that'd be great. Stavros, were you waving at us? Do you want to come back on for a second?
I think he was just waving goodbye.
Oh, what's up? Was that goodbye or was that?
No, it was
that
just,
the universal gesture?
Just looking at the comments. Yeah.
Guys, do you have any questions for Stavros while we still have him here?
Happy
we just
to.
Pulled him back in.
Oh, if people ask a bit, because I see some questions regarding analysis of other coins. I have a lot of analysis on other coins on the YouTube channel. They're free to watch. So yeah, the playlist is called Elliott Waves on Cryptos. It's purely just for cryptos, nothing else. That's my hobby,
Yeah, guys, passionate about it, and he knows his stuff. So go check it out, guys. All right, yeah. Now, someone said Poppy. All right, stop. All right, thanks so much for being here, man.
Time to go.
Time to go.
All right, Bruiser AB and me hitting buttons at the same time. All right, guys. How many likes did we get to?
Great question. Let's see what the KPIs are looking like. I see 90 right now.
Ew. All right, guys, we can get to 150 likes in the next 2 minutes. You get the Spice Girls. Otherwise, we keep them locked up, and they're eating macaroni and cheese lean cuisines. Bert got a different brain. It's actually not lean cuisine. He got the hungry man. And Posh Spice is pissed. So, I mean, no one likes to be around Posh Spice when she's angry.
Did you guys learn? Did you guys learn as much as I did in the chat?
Oh, whoa! Look at this guy. Whoa, guys, should we ban tapes?
I got news for you, buddy. You're in the wrong place.
Yeah, how'd you get here?
We did meet our key progress and indicators. 100 likes.
What does 100 likes get?
Oh, we said 150. Silly me.
Yeah, we're not letting the Spice Girls out for it. Oh yeah, I think you're getting the bounce on SAVA. It's at resistance from. So I'm looking at the 1 hour. I think you're getting it. I think you're getting that bounce. You need a new song. Do you know how hard it is to get songs that we're allowed to play on YouTube? So
hard. All right, Neal. I do have to run though. We haven't.
All right, guys. Thank you so much for tuning in to this Thursday edition of Get Technical. I'm Neal Hamilton. That was producer AB in his famous green shirt. Oh, he brought himself back. Thank you guys for tuning in. Follow me on Twitter at Neal's Tweets. Couldn't be easier. I hope you guys enjoyed that lesson on Elliott Wave theory. More lessons to come, as always, on Get Technical. Tomorrow's Friday Fun Day, so make sure you tune in for goofy fun times with a little bit of technical analysis to close your week. So thank you very much. Make sure you like and subscribe. And, as always, happy trading.
Yep, and coming up right now, we have a very special show, NFT show, The Roadmap. We're actually giving away an NFT live. So if you like NFTs, you want one for free, stay tuned. This stream will automatically redirect you over to the NFT stream. So don't go anywhere. NFTs coming up now.